I think we're doing this episode is because we get that question so much. Where do I start? What is the first thing I can do?
Well, and things have changed so much too, right?
It's a completely different market.
Real estate investing used to be sexy, and it isn't anymore. And why isn't it?
Yeah. And I think that approach, Andrew, is it's a numbers game.
What are investors doing right now? Newer investors able to do right now to get great deals, to still profit from real estate in one way or another. Welcome back to REI Hot Seat. Andrew Hines here with Jacob Campanaro.
Hello.
And today we're talking about strategies that work for new investors right now, today's market.
Yep. Real time.
With all the concerns, and there's lots of fear out there in the marketplace and a lot of people not sure what to do. Let's face it, real estate investing used to be sexy, and it isn't anymore. And why isn't it?
Yep.
Because it used to be that everybody knew somebody who made $100,000, $200,000, $500,000 on some house that they bought. Even if they weren't a skilled investor, the market just did it for them. Well, the market's no longer doing it for you. Not right now, anyway.
Mm-hmm.
Could come back.
And I still think investing's sexy. I don't want to say that, Andrew, but
it was sexy in a way like everybody wanted to jump on. You had tons of people on the sidelines, and they're like, oh, well, I just want to get in. And for the most part, they were safe in doing so because the market was friendly to them. So when the market's less friendly, that means we need to be getting, in my mind, better deals. So the topic of today is, what are investors doing right now? Newer investors able to do right now to get great deals, to still profit from real estate in one way or another.
Yeah.
So high level, I'm going to give a couple of the ones I think. Of course, there's off-market lead generation and flipping. So pairing those two, you have to be buying the properties at an exceptionally good deal, and you're making on the buy. So this is like if somebody wanted to go out and do like a duplex conversion or something like that, they may be steered away from that into just going off and trying to find good, cheap acquisition deals through direct mail.
Yeah, because with flipping, like the money's made on the purchase.
It is,
and I've said that for years, right? And people always come to me and say, "Well, let's look at flipping houses on the market." And honestly, as a realtor, it's really tough for me. Like, and my clients will know this. Like, I'm very honest when it comes to that. I'm like, guys, I don't know if working with me to find a flip is the best thing to do. Yeah, right. You really have to go find off market
for the quick flips and this is nothing new.
It's made on the buy.
And so that strategy worked before and still works now. Yeah. It's just you might want to be a little bit more conservative with it. So I've had people on this show and they said that they would buy a property at 70% of its after repair value, less the cost of their renovations. And for me, if I'm a newer investor, I'm not going after the stuff that needs a lot of reno. No. I'm going after the stuff that's a pretty basic, maybe a little lipstick, or maybe nothing at all. Maybe it's what you would call like a wholesale, where you just close it and then you list it for sale right away.
And that's it, right? And that can include removing garbage from the property, right? Like, so if we look at the fundamentals of why people sell off market, you talk with enough wholesalers, they'll all say relatively the same thing, which is, the house was in poor condition, so they were embarrassed to list. Or they were hoarders and they couldn't get all the junk out.
There's tons of people who don't want to list for one reason or another. Yeah. They might have some family issues. They want to keep things discreet. They can't be listing something publicly. They don't want people coming through their house.
They don't want to go through the hassle. They don't want to pay the commissions to the realtors.
Some people just have a vendetta against realtors.
Yeah, there's a whole bunch of things, right? So you can and I think that approach, Andrew, is it's a numbers game, right? Like, yes, you can fine tune your approach. But it's going to be get out there and either your mail outs or you're doing whatever you want.
And you can't, like, for some newbies don't have the money to fund a mail out program, nor the skill, right? Like, you're not necessarily going to know how to nurture the leads you find through mailers. So I think the same adage would apply. Like, go find somebody doing it and either get them to coach you or go work for them. Go work in their organization and learn that business, because that to me is a skill set that works now. It worked before and it's going to work for a long time. Mm-hmm. As long as you can find a way to provide value to a seller, and that they don't want to list and you're willing to take it and you're going to offer them a price that works for you and works for them, then rock and roll. And I think that I've long said that being able to generate off-market listings, off-market leads is an essential skill. Yep. So that's a huge one. That works right now, in my opinion. It's a strategy I'm actively carrying out in Florida right now. And I think that's one to start with. Is that an easy one? Not necessarily. You can also do door knocking. Like there's parts of that where it's just hard work.
Yeah.
But you bring in those leads, and even if you don't have any money, if you're starting to find leads that are a fraction of the cost, or maybe 40, 50% under market, now all of a sudden you could wholesale it and take a fee, or you could find a partner who's a savvy investor and sees the value in that and is willing to partner with you on it.
Yep. And I think that leads us into a whole nother approach, which is like finding, network, I would call it.
Well, you got to network, right? Because how do you find
scale.
that JV partner? Well, if you go to real estate meetups and talk to all the real estate investors in the room, a lot of them are going to be scratching their head saying, yeah, we don't know what to do next, or we're looking at new options. There's a lot of money sitting on the sidelines right now. So if you are bringing good, profitable deals that there's room to have a partner on and split the profit, I think that there's a
lot of people out there.
There's a lot of people out there that are willing to fund that.
And that's such a big one. Like, I have a lot of investors come to me a lot of the time and say, hey, like, where do I start? Right. And that's why I think we're doing this episode, is because we get that question so much. Where do I start? What is the first thing I can do?
Well, and things have changed so much too,
and
right?
It's a completely different market. So the meetups, I think, are more important than ever. And the meetups, I find, have been a bit smaller than usual.
They are smaller. Yeah. And I think the big reason they're smaller than what I used to do is the sexiness factor. Like it used to be so easy to see yourself doing it because of the low mortgage rates. You could just go out to New Brunswick, or you could go to what are some of the ones, like you could go down to the Niagara region and find deals that worked and cash flowed. And that was like 2 years ago, 1 year ago even, that was working before the interest rates really got jacked up. So that's where I started to notice a little bit of a shift in my audience. It was more of a refinement. The people who are still around they're more dedicated, more serious.
And that's actually where I was going with that. Sorry, I didn't want to make a negative comment. I was saying the groups have become smaller, and it's been such a good opportunity.
Yeah.
I at least found the last few events I've gone to, whether it's the your meetup, Andrew, or other people's.
Yeah.
The smaller group is more refined, and we're getting more action out of those groups. We're getting better conversations, more refined conversations.
Yeah.
It's really nice to actually see that. So my biggest thing to any of my clients right now is go to these meetups, start talking to people, and have those conversations. Go in with a plan, right? Don't just go in to say, I'm going to have a beer and see if I can talk with people. Go in with an objective. And that objective could be, I want to talk with 3 people tonight. That objective could be, I need to raise $500,000 tonight.
Yeah.
Right? But if you go in with an objective and you carry that through all your conversations, that's a great way to approach these events. And just get some phone numbers, put it in your phone, and follow up.
Yeah, if you've got something to fund and you say, hey, I actually have a property tied up right now, like you could come into one of those rooms and have an investor by the end of the night.
Yep.
I actually have some money right now. Send me the details. We'll talk tomorrow. Like that's how that kind of thing starts. So that's definitely one of them. The other thing I think, and we're talking, like, there's the 3 types of money. You got the now money, the medium money, and the long-term money. As an investor, if you're going to go straight for the long money right now, I don't think you're going to get the returns that you're looking for to stay in it long term. So this is why I think it's better to focus on now money strategies that will help you build up a base of capital, which you can then put into some longer term plays. Some things that come to mind are longer term developments. Maybe you can get involved as a partner on a larger scale development that might take many years, where they're offering a significant return. You can do stuff with private equity to generate some longer term wealth in that regard. And then in the short term, of course, you've got that engine building money. So I'm just kind of building a picture of something that could work. But if you just go and sink money into a property right now, on paper, it's not looking really like it that much is beating like a private equity play or something like that. It's not to say that it wouldn't, because we could be totally surprised that next year appreciation could kick off again. And as soon as the appreciation comes back, now your returns start to scale because you're leveraged. Most people are with their real estate.
And there's 3 approaches, right? Do you have the money? Do you have the time?
Yeah.
And I guess the third is, if you don't have the money
and
or the
skill.
time, you need the skill.
Right.
So you have to try to get one of the 3.
Yeah.
And then that's now your marketing tool, right? I have the skill, I have the money, I have the time.
2 of the 3 is better if you can.
And 2 of the 3 is better, and 3 out of 3 is the best, right? And so that's, again, that I talk to these investors, build the network. Network is so important to me. I built my career off a network. Right? I'm only one person, right? So and even my team, I only have 4 people on the team, 5 people on the team, and I can't expect them to be door knocking every single day to find off market product for our clients. So we connect with people in the industry who may have off-market products, right? So yeah, sure, we do a little bit of campaigning here and there, but at the end of the day, most of our product comes from people we've made connections with that know we can transact on those.
And do you get like smaller stuff too? Like, because some of the newer investors aren't going to want to necessarily start with a multiplex. Well, they might want to start with a sixplex, but usually your entry point is going to be a bit higher. But
flip, duplex, triplex, things like that. Yeah. And so we get stuff like that all the time.
Yeah.
You know, and that's actually something we have an abundance of, because for every one, 20 unit apartment that floats across our desk,
we get smaller stuff
10 duplexes, right? So
yeah,
it's totally across the board. And I have a dedicated team member who just focuses on that type of asset class, right? So anybody who's interested in that, come in, I'll set you up with Raza. We can sit down and
generating the off-market
look at
stuff.
Those. Yeah.
Okay. So they would still do that through the link under the video?
For sure.
Okay.
Yeah, come on in.
All right. So then the next thing that came to my mind, and if Jacob, you have any other part of, idea, let me know, is the active businesses. So a lot of people, they just want to be passive in real estate. They've been told real estate's a passive investment. Not as much these days for newer investors. Actually, it never really was for newer investors, because you have to develop the skill set. You're going to spend a lot of time setting up your systems. It can become very low involvement once you have good systems. But so nothing's really changed. The only issue is the real estate on its own might not cash flow typically. This is where I like strategies like what we've done with our camp, where we took a piece of real estate that we run a business on it. So there's businesses that are tied to real estate. I still like anything that involves hospitality stays for now. Doesn't mean it works long term. I also like the Airbnb arbitrage strategy. It doesn't really work great in Canada anymore. There's probably some opportunities in like cottage country and such, but just with the way the municipalities have cracked down on it, I think that's a more of a US play. Yeah. And I'm going to say something that might be controversial to some. I don't think it's a bad idea to start off in the US. I don't think so at all. It's not that hard to do. There's a lot of people doing it. If you go to the meetups, you'll find a lot of people doing it, and you'll have a lot of confidence built to think you can too.
That's an interesting statement on for newer investors as well, because you build your knowledge base in Canada or you build it in the States. It's the same thing, right? But a lot of people, the barrier to going to the States is that they've spent their whole career focusing in Canada. So they know the tax law, they know the legal ramifications, they know this, they know that, and now they're like, geez, I have to go learn all of that again for the States. So if you're starting out, geez, just go learn it now.
Well, this is why you surround yourself with people who are doing it, right?
And then from there,
and then you can go from there. Yeah.
And then from there, Andrew, now you're the expert on the States. Yeah. You spend 2, 3, 4, 5, 10 years investing in the States. You better believe you can come back to Canada and say, hey guys, I can show you how to invest in the States and make a business out of that alone.
Well, and if you were really good down there, you would probably have a lot of potential partners up here that want to do stuff, because there's a lot of money to be made in things like corporate housing, which is really like Airbnb arbitrage, where you rent the units out. You might be renting them out on a monthly on Airbnb, or renting them out to like hospital workers or traveling workers that come into the city for a while. There's a lot of different plays in that regard. Now, this doesn't build you equity, but you can still build up that now money where you can start sinking that money into longer term plays. So you've got your now money, and you've got, you're turning that into medium money by putting it into short-term and longer-term investments. So that's kind of what I see working right now. Of course, we've got our sophisticated investors that are still buying apartment buildings, and they're applying a lot of the same ideas about getting it at a really good deal now. So they're making money on the buy, and then they're okay to hold on to it too.
And even if when you make the money is going to be 12 to 24 months out, right, you're still making money on the buy.
Yeah,
right?
you got to carry out and execute a plan for 24 months.
It's not like because yes, I've seen some deals, but because the market is trending downwards, the challenge I'm having is that even if you find that really good buy today, the conversation is always, well, in a month it could be a better buy, or in 2 months it could be a better buy, right? So
but
you have to understand
there's competing forces. Like, yes, there are some places that are down, there's some places that are up a bit in recent times. So keep in mind, there's still massive immigration coming into this country, so it's hard to know where we land. We don't know for sure that we're going to continue going down. I think that there's a lot of reason to believe that we probably will in some markets, some areas, and in general, but maybe Toronto won't. I don't know, because a lot of the immigrants want to go to those bigger cities.
And I like to look at the macros rather than the micros, right? If you're focusing on a monthly a month over month transaction basis right now, yeah, then what I said there is going to hold true, right? You come in, you buy today. Well, next month that build, you know, if the market doesn't recover in a month, that building could be worth less in a month than it is today.
Yeah.
So yeah, I like to look at the macro, Andrew, where, you know, we can look at rather than, and we don't have to look at a year, but we can say, look at the last 6 months rather than the last month. Look at the last year rather than the last 6 months. And you know, and you can follow that trend, and you will, I truly believe you will make money in this market.
Yeah.
A lot of money is going to be made in this market, right? And it's about positioning yourself correctly.
Yeah.
And even more money is going to be made in the next whatever months, right?
I mean, always focus on buying stuff that makes sense when you buy it. And if you can get a great deal on something, then all the better. The big thing is you don't want to have to need your property to go up in order to make it work, because you don't have a guarantee in the short run. I mean, I think we all can agree in like the long run, like 20 to 30 years, it's likely that you're going up. You know, we're not Japan. Like in Japan, their real estate actually went down since the 80s. But the reason for that is they don't immigrate, and their population base is shrinking because it was aging. That's not happening here. Like, we're immigrating, we're growing, unless that were to change. So the odds are in the long run it's up, but it's about getting from A to B, and that could be an up and down ride. So this is why we want to focus on great buys. I've given some ideas. Any other closing thoughts on this, or?
No, I would say it's about putting the hard work in.
Yeah.
Right. And I don't, you know,
being willing to work. Yeah.
It's being willing to work. You know, maybe that's cliche,
but that's less sexy.
But that's
there
less
we have
sexy,
it,
right? And so,
yeah.
But really, like, if you could just spend a weekend or 1 day a weekend or 1 day a week, if you don't work that day, go find somebody at one of these investor meetups and say, hey man, can I shadow you?
Yeah.
Right? And just follow these people around, learn from them, help them work on files or work on deals.
Yeah, work on specific things they're doing.
Go that they do.
Be their boots on the ground, man. You can learn a lot of things that way.
And that's again, that's a long-term approach, but I don't believe anything in this life is made overnight. Like, I'm a true believer of
you got to put
overnight
the work in.
Success is what happens before. Right?
Yeah.
And so put some work in, learn a bit, spend the next year, 2 years, 3 years, whatever it is, and slowly start building this up with a good foundation.
Yeah.
So that you can go and make your millions, billions, and trillions in the future.
Yeah.
That's my closing statement.
Sounds good. And I like, the idea is you're kind of talking about investing in yourself, investing the time, building your education, building your knowledge base so that you're the type of person that can go do that.
You got it.
Yeah. Perfect. All right, Jake, thanks as always for doing this. Everyone watching, make sure you send this video to someone you think it could help, and like, subscribe, hit that notification bell just to help us grow the channel. Thanks. We'll see you next week.
Thank you.
Hey friends, I'm sure you've been noticing that cash flow is getting a bit tougher with these higher interest rates. This is why I've noticed a lot of investors shifting over to a more passive approach and also to optimize their overall returns. Tune into my passive real estate investing webinar that I'm hosting on November 8th, 2023 at 7 p.m., where I'll have special guests Carmen Campanero and Nick Wright talking about what private equity is, how you can invest in it, what private REITs are, and how you can even have your TFSAs and RSPs invested in real estate where it would otherwise not be possible. Space is limited to this webinar, so please take a moment now and register your attendance at www.andrew-hines.com/webinar, or go ahead and use the link in the show notes of this episode. I'll look forward to seeing you there.